Okay, so today we're checking out this chart here. So as you can see, this is the 60-minute chart, and then right up here at the top, you can see that it's the S&P 500 large cap index. So the S&P 500 index, and you can see we had this nice run up from August clear up into September. It was about a 10% run up. So that's why we're seeing, a little bit of the weakness that we're seeing now as September started. We've come down. You can see the A and the B in the yellow and the A and the B in the green, and then we're a little lower there compared to the green A. So it's really important to know what time frames you're looking at as you're talking about the stock market, and then also keeping your perception right about it. So this is the next chart. It's also the S&P 500 index, as you can see there, and then at the very top it says daily. So this is the daily chart. So these are daily bars, and then you can see back in March and February of this year, the big correction that we had when all the stuff happened with the beer bug. And then as we started to recover there, you can see how you can kind of count the waves. So you get the ones and the twos and the A's and the B's. And so, we've had a good run up for several months. And then as you once again see that August time frame, all the way through August, it ran up like 10% all through August, till the first part of September. And then, we're having that slight little pullback now. So not that big of a deal when you put it into context between the daily charts, the daily bars, and then the 60-minute, the hourly bars, which was the first chart. This one back here that we looked at. So 60 minutes, the hourly chart. So, we may see it go down a little further to, the bottom of the orange 4. So, or where the blue line is there around the 3100 level. So could go a little further as far as going down. But it's a great time to buy as there is weakness. I mean, this is the biggest wave, the biggest down wave going on right now that you guys can see on the chart, compared to all the smaller waves that we've had since clear back in April. So it's definitely a good buying opportunity. As you can see, the waves have just been really small. So this is a pretty big down wave. So that's a great opportunity to buy when there's lots of fear going on out there. Fear the market's going down. It's a great time to buy. So always do the opposite of what you're feeling. Buy when you feel fear, and everybody else, when they feel fear, they're selling their stocks. So you're able to buy them for a discount. You're able to buy them for cheaper than those people are selling them for, than they potentially paid for them. And then you can kind of see here a larger time frame as far as the weekly chart, and goes clear back to 2009, as you can see down there in the bottom left corner. So 2009, 2010, 11. But just look at how, over a 10-year time span, that they're just waves. It's a wave pattern. It breathes in, breathes out, breathes in, breathes out, breathes in, breathes out. So what's going on right now is we're just having a little breathe out. And you can see once we hit, the 2018, it got a little volatile there at the first part of the year. It was like a 10% correction. And then 2019, you can see the red 20% correction there. And then you can see the big black number 1 and the big black number 2, you know, a 36% correction, 37%, something like that. So potentially what's setting up here is just like what happened back here in 2011 when we had the other, you know, waves, starting out with the big black number 1 in 2011, and then, you know, halfway through the year, about this time of the year, there was a big black 2, and then, you know, the market started to take off and continued to go up in 2012, but still had, you know, breathe in, breathe out patterns. 2012, 2013, 2014, 2015, 2016. 2016 did have a little bit of a rough time there, a little bigger breathe out pattern, you know, 15% correction, but once again, a great time to buy, because what happened after that? Look at what happened in 2016 after that time to buy. Then 2017, great. 2018, great. 2019. So whenever we start to see these big breathe in, breathe out patterns, start to buy. When it's down 5%, start to buy a little bit. When it's down 10%, start to buy a little bit more. When it's down 15%, buy more. When it's down 20%, buy more. And then when it's going up, like it did, you know, for a good portion of this year, just hold on and enjoy the ride as it goes up, and be, you know, saving some of your cash so that you can buy whenever it goes down, like it is right now today. So just wanted to go over these charts and explain a little bit what's going on, and potentially what's setting up for the next 10 years here is just like what happened back in 2011, where we started out with the big black and, you know, 1 and 2 with the waves. We're just getting ready for higher and higher prices as we move into the next decade. And I'll do more videos on why that is, why prices are going to continue to go higher. But if you like the video, like it. Thanks for subscribing. Leave me any comments or suggestions, and we'll see you in the next video.